Hello, folks. Bill and Brian here with Energy Road. And listen, today we're going to talk a little bit about the markets, what's happening for 2024. So sit back, open up a refreshing beverage, and Brian, let's roll the logo. Brian, what is the logo for 2024? Is it more in 2024 or out the door in 2024? What are we talking about?
Well, we're going to talk about production and demand. We're going to stay focused on crude oil. There's been a lot of activity on natural gas. We're going to cover that in a separate session. But what we're going to talk about today is the United States, according to the EIA, started the year at 12.1 million barrels a day and exited over 13.3 million barrels a day. And if you stick with us, we're going to walk through what that means. So 12.1 to 13.3 over 1.2 million barrels a day. And we're going to tell you why that's not as much as you think. 1.2 million barrels a day does not equal 1.2 million barrels a day. So we're going to talk about that as well as world demand and production. So we're going to walk through this. Stay with us. We're going to be about 30 minutes. That's what we are going to keep it open for comments and questions along the way. But what we're going to cover is production in the United States, production in the Americas, world demand, and what the production profile looked like from 2020 to 2023, because that looked very, very interesting. So, any comments before I dive in, Bill?
No, just want to wish everybody a happy new year. Thanks, Brent, for wishing us a happy new year. And we really hope that you guys are ready for a great 2024. And we want to work with you to make it a great 2024.
Yeah, and be sure to ask questions along the way. We may get to them a little bit later in the live cast, but again, we're going to do about 30 minutes. So let's dive into the first topic, and I think this is an important topic. This is one of our charts, which we do have a interactive platform that is $89 a month, and you get access to supply, demand, imports, exports, storage stocks, so much there, along with access to our Discord community, which we talk about the market, and it's a small investment. If you spend more than an hour a month looking up supply, demand, imports, exports on crude oil, natural gas, NGLs, refined products, electricity, in our opinion, you're wasting time. But please take a look at some of the fundamentals, because that's really going to drive price. A lot of people want to talk about price. We offer our perspective on price. We are not financial advisors, and there are times that we're wrong. And for example, one of our live casts on natural gas, we thought we were going to be at 3 by the end of the year. We were not. And so one of the haters on YouTube said, "You guys are wrong." In our Discord community, we had several that were taking the opposite position. So, did I miss anything on the commercial before we dive in?
Yeah, not just you just went too real quick on Discord. We do have a Discord community where you're able to actually interact with other people, and what we want to do is get smarter together.
Yep. And I send out daily videos on the markets and what is happening on the topics of the day. But let's get back to where we were. We exited last year around 12.1 million barrels a day. And we rose all the way to 13.3 tomorrow is the petroleum status report because it's a day delayed due to the holiday on Monday. Happy New Year, folks. So glad you're here. So 12.1 million barrels a day to 13.3. That means 1.2 million barrels a day. But right, Bill?
That's how my math works, except for maybe I'm just using the wrong kind of math.
Well, according to the EIA, there is a change to some of that math. When they were measuring 12.1 million barrels a day in December, that does not equate to the same 12.1 million barrels a day in December of 2023. So there was a change, and the release date of this came out in November, but the actual uptick was happening months before. So but the changes in how the petroleum status report reports production has changed. And what that means is they are including transfer barrels. What are transfer barrels, Bill?
Basically, what that is, transfer barrels is the blended barrel where they actually go from one type of barrel to a different type of barrel. They call them transfer barrels or blended barrels.
Yep. And this is the definition of what they calculate transfers to crude oil supply as the sum of weekly production of natural gas liquids reported in Alaska on the EIA 806 minus the sum of natural gasoline, unfinished oils, and from the most recent petroleum supply, minus weekly production of condensate, plus weekly stock change of condensate. Boiled down, what that means is a portion of this volume that was reported in December includes transfers. These are essentially blending barrels. So what that means is our production increase isn't absolutely 12.1 to 13.3, is it, Bill?
No, actually, when you think about blended barrels, you think about what we used to call the dumbbell barrel. The dumbbell barrel was that you would take lean crude oil and mix it in, and sometimes condensate. I know people don't do that, but the word condensate gets to be a little bit broadly defined. But take that, you blend it in with lower grade gravity crude oil to make a standard gravity crude oil, but that crude oil doesn't necessarily have the same qualities of the two of a refined barrel that you would like.
Right. Right. So, but one thing I want to point out here is when we take a look at what has happened since COVID. So, as you can see, we topped 13 million barrels a day and we dropped. And the reason that we're starting with the US production here is from the COVID times to today, we went from 11 million barrels a day. And we ended 2023 with 13.3. The new number is coming out tomorrow in the petroleum status report. But what did it take to get from 11 to 13.3? And percentage wise, what that means is a 21% gain in 3 years or two years, really. So when we look at what it took to change 21% or grow 21% is because of this. Our rigs tripled in that time. In the Americas, this was the largest change in rigs in the world because the world changed, I think, 400 rigs, and the United States represented probably close to 300 or 300 of it. So we tripled our rigs and we increased our production by 21%. So that means that there has to be a lot of momentum. But the one key attribute that I want to key in here is since we peaked earlier this year on rigs, we've been dropping. And there's a delayed impact of what that does to production. So we haven't seen that delay yet, but that delay is coming. What's going to happen, Bill?
Well, what's going to happen is the production is going to go down. Also, with all that new production coming on, that increases your decline. Your decline is going to overcome any new production. And the other thing I'd point out, anytime I see a chart that jumps like this, the first thing you should do is ask questions.
Right.
Because
Right.
that's not, especially in a time when rigs are declining.
Well, and as you can see, we actually added this for our members. Again, Rogue Edge is only $89 a month. We connect with every single one of our members, and we also have a Discord community where we talk about the markets. But let's look at the declines in the Wolfcamp. So Wolfcamp is a section of the Permian for those that aren't aware, and one of the more prolific ones. And the average initial production, or IP, comes on at roughly 1380 barrels a day, so 1,380. By month 12, it is producing, that same well is producing 200 barrels a day. So what that means is that you have to feed a cycle of continuing to replace. And that's the reason that in our platform, we separate out, we track all the rigs in all the particular basins. But what we also take a look at is let's just isolate this in the Permian. And then we can walk through one of them. And let's go from here to here. So we went in the Permian from 4.4 million barrels a day to 5.97. So how did we get there? Well, what Bill is talking about, and this decline chart is showing us, is when new production, sorry. I was doing COVID period, wasn't I?
Yep.
There we go. So in the Permian, it declines by 400,000 barrels a day every single month. So what that means is that they have to replace that with new production. So new production comes from those rigs. And what we can see here on a trend, and again, all these charts are active on our platform, $89 a month. Not going to be too overly salesy, but we did have some uptick. We've been struggling to stay above that 400,000 barrel a day mark. And so what that points to is, now there are some completion differences in different data sets. This comes from the EIA drilling productivity report. So there are different states and monthly reporting and weekly reporting and daily reporting that are a little bit different. But what this means is that while we haven't felt the impact of the production decline yet, you can see that we are struggling. We add a lot of volume each month in 2022, but now Permian's not growing anymore unless we add more rigs.
So the other thing to think of, folks, is that a lot of what we saw in a recent bump in the Permian is because they actually added natural gas infrastructure. Permian is an associated gas play. So they had wells that were shut back because they couldn't produce the nat gas because it had nowhere to go. But with the Permian Express and what was the other pipeline, Brian? They just Whistler just opened up additional capacity to bring gas out, which would allow them to go ahead and produce the crude oil. And so as that comes out, it once again, we're showing that in the first 12 months, a Permian well can decline anywhere from 50 to 75% in the first 12 months. And so you have to always be replacing that, or you will have net declines. And so the problem with the replacing it right now is not the access to the rigs, it's the fact that prices are depressed enough that people don't want to put the money into the drilling. Now, one of my Bill Shanahan theories, I'm not going to drag Brian in on this, is that as the Permian consolidates into larger producers and more integrated production companies, that you will see a slowdown only because they're not going to go full bore and drilling because they know where the reserves are. They already got them. They're going to be more particular about how they drill, and they are also suffering, or not suffering, but comparing it to global production. That's the bottom line. If you're making a 20% return in the Permian, but you're making let's say a 40% return in either Nigeria or Venezuela or somewhere else, you'll go where the higher return is. That's just what it's going to happen. And so as these majors come in and pick up a lot of the acreage, you could see the activity level steady, but not necessarily increase by a lot. And a lot of that has to do with going back to how do they bring money to the share price?
Yep. Yep. So the main takeaway here is that Permian is relying on replacement volume. And as you can see on the slope of this curve, we grew significantly from COVID, but then you can see it in 2023, we just kind of flatlined. I mean, there is growth here, but this is not, I mean, well, I don't want to dismiss a couple 100,000 barrels a day, but we haven't seen the slope change, and that's before we felt the impact of this. This is what we're looking at as a key mark. In early August, the Permian rigs topped out at 357. It's now down to 308, so a 10% drop. Meanwhile, we're already struggling to stay above flat. So the Permian, as much as people are expecting growth, I don't think we're going to see growth until we see rigs start to increase. And the rigs need to be higher than, I'd say, 350 to really see anything significant on growth. So that's my back of the envelope, is about 350. If you are curious and you want to learn more, you can reach out to us. There's emails down below and a way to book a meeting with us. If you're interested in Rogue Edge, we'd love to have you. Well, our community has been growing and growing, and we have people from all different sides of the business. We have hedge funds, we have traders, we have producers, a lot of producers, midstream, downstream consumers. So, and we focus on oil, natural gas liquids, refined products, and electricity. But the key takeaway here is we tripled our rigs and we increased our production by 21%. That's not enough. And we're starting to drop our rigs. So I expect the United States production to decline and for us to be back in probably the 12.5 to probably 12, pushing by 2024 exit. If we don't see significant changes in price, I would expect us to exit 2024 struggling to stay above 12. I'm expecting a very steep drop because all this new production that has come on is on a steeper decline. So that's what I'm expecting, is a potential decline of 1 million barrels a day. Now let's match that with what OPEC is considering for supply and demand. And now OPEC is looking at their supply demand portfolio, or for the not the US, for for the globe. In 2020, demand was 91 million barrels a day. Obviously, 2020 had its own issues because of COVID and COVID restrictions, and that impacted demand. That was the weirdest supply demand shock we've had, at least in my lifetime. In 2021, we started to stabilize at 97 million barrels a day. Then we increased to, in 2023, over 102. And with a projection of a recession in 2024, OPEC is expecting another 2 million barrels a day of growth. So if the U.S. declines by 1 million barrels and we grow by 2 million barrels of demand, what does that mean? Tell me your thoughts on this, Bill.
Well, not only that, even the new production we're bringing on is we're bringing it on for export. It's not
Right.
really coming into our own refineries. And so what that means is that in the U.S. we'll be importing more oil, and realizing that with all those exports and imports come a few geopolitical issues that happen to affect that. So I would say that we would see imports increase, but it can't. So once again, it can't increase too much. It's not going to be crude oil being imported. It's going to be refined products being imported, because our refineries are already running pretty close to capacity. I think the last time I looked, they were at 95%.
Yep.
And so, so what we'll be seeing is stuff coming in from. So what was it? Oh, I guess it was Nigeria that's got a new refinery coming on, but I think it's coming on in 2024. I think it is,
Yeah.
and that can do like 650,000 barrels. So we could end up importing Nigerian refined products, and so that's the thing that you have to look. The balance isn't always just crude oil, and so that's where
Well,
I think that's what we're looking at, and our exports will diminish a little bit if we can't. If we have production down, exports will diminish. With demand up, imports will increase. That's
yep.
that's the math I see.
And so the math to keep in mind is we produce 13.3 million barrels a day, but we import 6.2. So that gives us a total supply balance of 19.5. And this is from last week's. Tomorrow, this is going to be updated to the new one when the petroleum status report comes out. Again, this is something that comes out when the data is available. But on the demand side, we're refining over 16 million barrels a day. And as you said, we're running everything through our refineries, which tells you current current supply or current demand is there, but we're exporting 4 million barrels a day. So any reduction in our production is probably just going to impact the exports, I'd imagine. Would you agree,
Right.
Bill?
I would say that as most of it's going to affect the exports, mainly because of the crude oil we're producing right now is a lighter crude oil that doesn't necessarily go through our refineries and refines well in the refineries that we have right now.
Okay. So let's pause here. Let's take a few questions. Brent, great to see you. I hope to see you in in early 2024. I almost said 2023. Happy New Year to you. So glad you showed up. Let's see, Joe. Thanks so much. Really appreciate you coming, joining part of Rogue Nation. Lots of condi being trucked and trained to Monterey to stretch Mexican gasolines. That is important insight, and that's part of the reason that we set up our Discord community, because this is the type of stuff that we get to see, because this is the type of stuff. So Joe, appreciate that. And actually, you were saying naphtha. I mean, it all matters. Every movement of the imports, exports, it matters, because all of this, we did a session about a month ago where we talked about diesel, and diesel demand has been increasing and our diesel stocks are low. And so we projected that refineries were going to start to increase their inputs to get diesel, but that's going to put downward pressure on regular gasoline because you can't separate the two. So, Joe, appreciate you showing up. Appreciate you being part of Rogue Nation. And let's see, just two dreamers living life. I love that handle. Happy New Year. So glad you showed up. Thanks so much. Richard, great to see you again. And listen, good morning from Houston, originally from there, still an Astro fan. So let's see, please share your view on nat gas. I will give an abbreviated view, which is my view on natural gas is that we are severely undervalued. And there is, and in our community, there are several people that actually played natural gas from yesterday to today and went from 254 up to 263. Tom, if you're watching, congrats, good job. But if we take a look at the supply side of the equation on natural gas, the reason that we've had so many struggles is because of this sharp increase in production. But I do want to point you to another aspect, which is we're starting to get into the weeks 3 to 4 temperature outlook, and this is what it looks like 8 to 14, and the 6 to 10. We actually think in later January, February, and March we are going to have significant weather, and we do track degree days for various periods of time. But in short, my view is we will continue up. We are severely undervalued, and the fact that this supply is about to tip over because it is going to be impacted. It is going to be impacted. So, so let's see. Joe had another one. If I get, I get it big. If replacement barrels go into SPR, how will that tighten the market? That's actually a great question. Chinese recent supply, China increased their import quotas for 2024. That is an indication that we're not slowing down. So
Well,
this talk of
not only did they
recession,
increase their quotas, but they actually front loaded them. They wanted
right?
more now than later. And
Hmm.
so I think that tells you what China thinks what the price is going to be later.
Yep.
Just saying that everybody has a calculator.
Yep. Everybody has a calculator. So,
And
so
going
let's
into
take.
the SPR, Joe, man, I just don't know. You know,
Well,
it,
let's take a quick look at the
I,
supply balance. So if we are looking at the supply, and we've grown by this 12 to 13, but 300,000 barrels of that are transfers, and we're starting to drop rigs. That means our production is going to decline. Now, Bill, I'm going to put you on the spot because I can't remember off the top of my head. Barrels that go in SPR, are they light or are they heavy?
no,
Or are
they're
they
heavy.
both?
That's what I was about to say. They're actually they have to be able to be used by our refineries.
So
And
what that means is that we've got to go back and look at this balance,
so
and we look at our imports. So what that means is our imports would increase and our exports would increase, right?
right. And the barrels that they've always liked for our refineries and come from a country. What was that country's name? Oh yeah, Venezuela. And now all of a sudden we're being nice to Venezuela. So when you start seeing the Venezuelan crude, it's probably going to go to the SPR, would be my guess. And that is strictly a guess, folks. I'm trying to make connections that may or may not be there.
But my guess, we do track this on our website, and Joe, since you're a member, if you can't find it, let me know and we'll point you there. Um, but this drop off from 2016 to here and this increase, I don't expect too much out of Venezuela over the next year, maybe a couple 100,000 barrels of growth. There are some that expect 1 million barrels. I don't see it. It's going to take them at least 18 months to build this back up. And so Venezuela, but our imports are going to increase. And let's see, Joe had a tack on comment. No taxes on those barrels and gallons versus diesel, taxes crossing the river. That's actually a great insight there. And one of the things, let's see, let's go to storage and stocks. Let's take a quick look. So commercial crude, we're kind of down close to the, so if you go to crude oil, storage and stocks, and then you go down here, we're pretty close to the 5-year, we're approaching the 5-year lows on our commercial crude stocks. As you can see, this 5 year. We did build back a little. So that the next report, I want to see what they did, but they added 790,000 barrels. So they did add back a little. If you listen to the price, here's the challenge. We're entering an election year, and we're expecting tightening in the U.S. supply. And the reason that we're expecting tightening U.S. supply is we see production tightening in the U.S. and we see demand continuing at least to Q3 or Q4, or at least I do, because our demand has been solid. And I'll tell you this, if we don't have this recession that they've been talking about for 16 months, crude market is going to tear. So don't you think, Bill?
Yeah, I think so. I think one of the biggest things, and Joe, we appreciate your comments, and I'm going to go back to your comment on NAFTA. Mexico's also got a refinery being built, a 350,000 barrel refinery. And
Oh,
so
I
that
forgot about that. Is that on the West Coast?
I don't know exactly where. I think it is on the West Coast, but I think that's going to have an impact on their gasoline inside that area, but especially inside the Mexico. And so I don't know how that's going to affect it. So if you're going into one of those refined product plays, you want to make sure that what you're looking at is take a look at what can be done now. Now, Mexico has never been really efficient about how they produce their resources, but that doesn't mean that they can't produce a lot of them.
Yep.
And so I think we've got a lot of things that are trying to balance out. And the real crazy thing is always the geopolitical events that can happen. I
Right.
mean, everybody thinks we know what's happening because we know there's 2 areas of conflict. If we all of a sudden had 4 areas of conflict, we would all be saying something different. I promise.
Right.
And so,
I mean, let's not forget there is a war happening in Russia, Ukraine.
right,
There is a war. I don't know if it's called a war, but Israel Hamas, and that is right in the middle of a lot of shipways. And over what did we quantify? A third of the production in the world
Middle East, yeah,
is it comes out of the Middle East, and most of that is 2/3 of it is shipped around that area. So,
right.
um,
Everything that's going into the Europe comes through the Suez Canal and comes through the
so
Red Sea. So and then when you start thinking about the Straits of Hormuz, there's a lot of crude oil in very tight spots.
yep, yep. So, but if we take a look at crude and products, what we do is we take all the refined products and we take all the crude stocks and we take a look at all the stocks and lump it together into one number so that we can kind of crystallize, well, do we have a lot or a little in our stocks? We have close to our 5 year minimum. And for perspective, let's see, let's take this back. I think the chart runs out before. Oh, no, no, no. Last time we were there was
But
2004 or 5.
right,
Let me clean that up so that people can see just the one variable. But right, this is 2004 to today. This is the lowest that we've been since 2004. And that is something, if there is an interruption to crude supply, there are potential. We're not financial advisors. We don't claim. You can read our disclaimers down below if you want to get bored. But the key is there is going to be a rapid price advance. So I see that as really impacting things. But let's take a quick look at. Should we take a look at the charts?
I'll tell you what. Well, let's talk about the summary. Since we're already in about 35 minutes, and I don't want to keep people's time too long. But one of the things that you need to understand is what we're really predicting for 2024 is volatility,
Yes, yes,
and it's going to get a little crazy. I think in both commodities, both the natural gas and in crude oil. I
Yep.
think natural gas has a stronger upside potential to do that. Crude oils may run up, then run back down, run up, run back down. It's going to be a little bit more like your toddler is when you give them too much sugar and caffeine. And
Yeah.
so the natural gas it's going to struggle to go up because the bears are going to try to keep it down. But it's just a matter of when you start running out of supply, when those declines start overcoming your new production, it doesn't have much choice but to go up in
Yep.
price. And so that's what we base a lot of what we do. We look at the fundamentals very strong. And Brian, in the more short term, he looks at the changes in the um, technicals, and we have a tendency to argue a little bit over that. And but it's always what I say is when you're looking at technicals, which is basically what runs a NYMEX, you got people who don't own any oil and gas determining the price of oil and gas. That always sort of sends me over the edge
Yeah.
and it makes me jump on my soapbox. But so when we look here, this is what, Brian, you're looking at nat gas. And when you start looking at it's got more of a contango feel to it.
Mm-hmm.
And so whereas crude oil doesn't, which sort of surprises me, but
So these
I,
are these are the futures contracts for natural gas, and as you can see, the next few months were kind of depressed, and then we start to increase during the summer, and at in December we're already trading at 350. So a lot of people are already expecting this, and then you can see for 2025. Let's take a look at this. We start the year at 380. We exit at 4. So the forward market is expected by traders to increase, and that this is an abnormally low period of time. So depending on your time window, when we talk about natural gas, a lot of people ask about price expectations. Well, if you ask for expectations for today, I'd say, well, our expectations this morning, we sent out a video that we were trading about, let's see, we were trading about here in this 256 and postulated that it is either going to come back down, test this and jump up, or it's going to go straight up, but our expectation was up. So today we were on target, but then when you stretch that out to the longer term, it's going to depend on some of the weather attributes, and it is going to depend on where did I put the production? No, I went off the production,
right.
and the production, which I do expect that to drop back off. So let's see, we've got JY28209. Thanks so much. Good to see you again. I'm so glad. In case WTI price remains low for a while, will that cause less rigs, which in turn results in less associated gas and production? That is correct. And so if you
Well,
have,
I'm going to hold off there because just because WTI remains low, if you see your gas price jump up, they could use the associated gas to subsidize their crude oil income. And so it depends on you got to watch that balance. And so and they are working hard to make sure that they can make money at 70 and $75 a barrel. So when you talk about WTI price remaining low, I think that right now the price we are is low when you can talk about inflation from the last 20 years. I think it's low, but when you talk about where it's been and where it could go, if you're thinking it's going to go to 95 and then rocket up from there, I'm not sure that even that's true. So I would look at something between 75 and 85 as being somewhat normal. And so any kind of gas and some of this associated gas at Permian's big volumes. And so if they get a buck from that, because they're going to have to produce it, whether they're producing oil or not, um, I I think there's a balance there. that would require just a little bit more analysis before we just say, yeah, generally that would be the rule. It's not as simple a formula as just saying plus or minus.
It's not a straightforward calculation, but as you can see, we've continued to grow. And one thing to consider on this is the Permian, so this is associated gas. So when you're talking about watching prices, you've got to watch natural gas and you've got to watch WTI. WTI is going to drive the associated gas, which I'm picking on the Permian here, which is continuing to grow, but we have kind of flattened out a bit. And I do expect let's take a look at the net on the Permian gas. So so we are still growing in the Permian. So the Permian is continuing to grow, and there's some nuanced reasons for that. But one of the things that I wanted to point out is it's not a straight line, just WTI driving gas prices, because if gas prices respond and get to $4, you're going to start to see growth in the Haynesville. You're going to start to see growth in the Marcellus Utica, which is currently growing quite a bit. I mean, those two basins alone represent half of the U.S. supply, and
Right.
and another 25% of it comes from the Permian. So those three basins, the reason that we look at every single basin is because the Marcellus Utica are going to be driven on gas prices and NGL prices, but the Permian is going to be driven on WTI prices. Hopefully that answers your questions.
So the big things that we were talking about when you're talking about gas in 2024 is that it's going to be volatile in the first half of the year. But when you get toward the back end of the year, they've got to be securing gas for the LNG projects that are coming in 2025. And so when you look at gas, natural gas as a uh, heating source, that has always grown about 3% a year. And so that's what you're going to, I think you'll see it continue to grow 3% a year. The biggest growth in natural gas has been LNG, and it's been huge. I mean, it's
Growth in demand, you mean?
growth in demand. Well, and that's why we had the growth in supplies, because we had this demand spike that was coming from LNG. That looks like it's going to continue, maybe not as high as people expect, but it is going to continue to rise. And so those are the two areas that you're going to see a difference in what nat gas can do. And so that's what I would be watching for. And so as nat gas goes up, that will help the economics for crude oil be produced at a lower price.
Yep. And essentially, what Bill's talking about is the fact that we're exporting to Mexico on natural gas. And thanks to Joe, we now know that there's some exports on naphtha, but over 20 BCF a day is going to Mexico and LNG exports. So there's a lot to go in here. Hopefully that answered your questions. If you have more, please reach out to us. There's information down below. We're not financial advisors. We do offer our opinion, and hopefully this helps educate you on what to look for in 2024. And if you are watching and you're not a member of Rogue Edge, it's $89 a month. Many of our members think it's drastically underpriced. We probably are going to change that in 2024. So stay tuned on that. But we would love to see you. And the main thing is that we get more educated amongst ourselves. So thanks so much. And JY, really appreciate that. Glad it answered. If not, reach out to us and connect with us. So any closing thoughts, Bill?
No, just hope you guys have a happy New Year's. Get your plans out, figure it all out, get it all written down, and then look at it in 6 months and realize, what was I thinking? That's what always happens to me. You know?
And if you've gotten anything out of this and you've been watching it, please like, subscribe, share, all that stuff really helps. So really appreciate you showing up. Thanks so much. And we hope you have a phenomenal 2024. And if you join us, we're going to try and make it phenomenal together.
Right.
So
Come go rogue with us.
Come go rogue. And I'll leave it to you to walk us out, Bill. So
all right, folks,
out.
let's just let you know that, man, be safe. We care for you. We're here for you. So Brian, let's roll that logo.
Okay. See you, folks.